Welcome, everyone, to this episode of Perpetual Perspectives powered by Vest Exchange. Vest is a novel perpetual futures exchange built on ZK Sync. This is Stoic, and the pod has been on a bit of a hiatus with holiday season and it being a fucking pain in the ass to work out logistics, which is understandable considering it seems like some people do, in fact, have a life outside of Twitter and crypto. But we're back with a banger, and today I have the honor and pleasure of having with me the giver at Lazy Villager One on Crypto, who I have been pestering for like fucking 6 months to come on the pod, but we're finally getting it done. He's been in the game since 2021 and is well known for his articulation of ideas on Twitter and thesis or narrative based trades. He's also jokingly referred to as verbose GCR. Thank you for sitting down for a discussion with me, Giver. Without much delay, let's get right into it. Would you like to introduce yourself or fill in any missing gaps? Because my introduction was fairly short.
No, that was pretty good. Verbose GCR captures it well. Yeah, I would maybe add just a little bit that although, yeah, my foray into crypto started in 2021, although, yeah, the way that I got started and kind of when I started taking trading, a lot more seriously, and my experience this cycle has been very different than last. So, but yeah, maybe we'll get into that later. So
I'll we'll definitely get into that.
I'll up to you.
I think the first thing is the story behind your account name on Twitter, because for anyone who doesn't know, and I've read this novel like a long time ago, but The Giver's a dystopian novel from, I believe, the early 90s. And there's a setting of a society which appears utopian at first, but then it's revealed to be dystopian nature as the story progresses. But I always ask everyone this: what's the story behind your account name, and why did you choose that? Why did you choose The Giver?
That's a good question. I actually don't think I've shared this publicly before. So the reasoning behind my account name is, I would say, it's twofold. The first is that the world that the book is set in, like the book that you referred to, it's one where effectively everyone just sees things in black and white, except for the giver. And like once every like 50 years or something like that, when people become of a certain age, one person is randomly kind of selected to be, or maybe it's not random, there's some hereditary component, but that person is selected to be the next giver, and that person kind of gets all the memories of both the good and bad of what has happened in their society, and they're the only person that can actually see color. Everyone else sees in black and white, and everyone sees only like kind of like the good parts of society as well. So that was kind of the inspiration behind the name, which was effectively being someone that could see both sides of an argument and not being skewed in one direction. And then around the timing of the name was, yeah, like I just I wanted to give back to the community that I had been lurking in for a few months before actually penning my own thoughts. So the combination of the lore and the immediate thought that came to mind was the symbolic nature of kind of creating that.
I love that, man. I love that. And especially like right now, I mean, on Twitter and society in general, we don't need, this is a wider discussion, but I think that's a major problem where people just see things in black and white and are unable to see it in color. So, but yeah, I love the lore behind the name. But let's get into your background, right? In terms of investment banking, or getting to investment banking, or trading for that matter. How did you get introduced to the entire arena of financial speculation? Like, how were you inclined towards that, or is there like a story behind that?
Yeah, I think I would say my passion for finance, or just finance trading, I think I was pretty late to that relative to other people. So I think even from back in high school, I didn't know what I wanted to do, but I took a lot of AP classes to challenge myself in my senior year. And I actually remember this. I was taking like an AP physics class, and
wait, hold up. Was it A or B?
It was
Which
A.
AP physics was it? All right.
No. Wait, it was the easier one. It was the easier one.
It's the easy one. All right, all right.
Yeah, it was the easier one. And actually, like I was taking a lot of AP courses, but AP Physics was like the only one that I was like honestly like kind of struggling with to keep up. And yeah, I was taking the harder AP Calculus as well, and that wasn't that hard, but yeah, AP Physics I found quite difficult. And it was like this one random class that I had with yeah, obviously with my classmates, where I think the class had to do something with, I don't even remember what the class was, but we were learning something where I just was not able to grasp the concept at kind of first listen, and I had to like do some practice. I was doing some practice questions mid class, and it took me a while to kind of get my head around it. But I noticed that there were other people in the class that could either like they were able to like they were able to get it at first glance, which was something that I was used to be able to doing, but wasn't able to do it in that specific environment. Or they just got through the practice questions like seamlessly without putting in as much like effort as I needed to. So that I knew right from that point that going into doing anything sciences was just not a winning move. Like I knew I could never be the best in something like that. Because my little class, 2 or 3 people I kind of already showed the proficiency to be able to yeah, there was just like a clear cerebral difference there. And so I just didn't think that was something that I could scale and be the best in. So naturally, you know, um, business, commerce, economics, that was kind of like
Okay, it looks like the reception is
I
going
think
bad. I'm losing
I
you.
read a book around central banking. I think it was called Three Central Bankers in a World on Fire. And then as I started college and taking economics, I was just kind of off. And yeah, eventually that just got me started into thinking more seriously about finances. All right. Sounds good. Yeah. So, once I kind of realized that that was just not an environment that I was likely to be the best in, just something that I couldn't kind of scale into, that the notion of commerce and business and economics was just kind of the natural next opportunity down. And so kind of urged by some books that I had read, I think I read a book around central banking. I had read some Michael Lewis books. Yeah, that idea of taking finance as a career kind of acclimated in my head, and I began taking it more seriously as I went through college.
Yeah, thanks for sharing that. And I find it kind of interesting that you said, hey, you realize that this is not something that you're going to be the best at. So were you always like competitive in nature? Is that something that you always held? Like, hey, like I need to be the best at something, or I need to be in the top tier of whatever I'm doing.
I don't think I had ever really thought about it like that super consciously.
Yeah.
It was just the nature of, yeah, like if I'm going to spend a lot of time doing something, I want to be really good at it. So yeah, that's interesting because the way that you just framed it is not the way that I've like ever like kind of consciously framed it. But I guess so. I mean, I guess that's true.
Yeah, it's interesting because most of these conversations that I've had, there's always that underlying theme of like being the best at something or being at the top tier of whatever you're doing. So I just found it interesting that you use those words. You're like, hey, I didn't think I'd be the best at this, so you kind of pivoted. Um, and what I wanted to ask you was, what did your trading look like initially, and how did you start? Like, how
Mhm.
did you learn? Where did you get your information from? Like, did you have mentors? Like, how did you approach that?
Good question. Good question. So yeah, in 2021 and 2022, like I was not trading in the sense that I would define it now. In 2022, 2023, sorry, 2021, 2022, the bulk, I would say, of what I was doing was flipping NFTs and playing mini games. So, I was, yeah, I guess three things. So I would look for new kind of like own Ponzi's because I was very familiar with the concept. And so it wasn't just like ohm coins, stuff like obviously Olympus DAO has been very, very well covered. There was Wonderland, which was Danielle Sesta's concept, but there were other similar yield Ponzi's as well that were differently disguised. So stuff like noting, strong block was actually like or strong note or whatever was like a really big concept at the time. So things of that nature, or like these little like yield mini games. So stuff like DeFi Kingdoms, Corbata on AVAX, Wolf and Sheep game on Ethereum. They were all kind of, they were all different versions of the same concept, which were inherently Ponzi's. And yeah, so I found those games really fun to play. So I was doing that, and then yeah, minting and NFT botting and scalping was kind of the other area. And yeah, I didn't even touch leverage, to be honest, up until like ApeCoin. I think I made a post about ApeCoin,
Mhm.
and it was only then where I like was trying leverage for the first time, and then I ultimately kind of used leverage in the Luna short as well. But I really didn't know what I was doing, and I would continue to not know what I was doing up until I would say yeah, the middle of 2024, which is that's kind of when I started taking trading much more seriously.
Interesting. And I think you probably covered this on the 1000X pod as well, but just for the sake of completion, if you want to just skim over how you got introduced to crypto, did you just like stumble across it, or like what did that look like?
Yeah, like it was a mixture of a few things. So one, it was someone I had someone, one of my friends who just kept poking me to take a look at it. I just kept like reiterating how crazy the opportunity set was, and how well he was doing with some of the ideas and trades that he had made, which was, which inspired me. But the second notion, it was interesting because like it was by pure circumstance. So I started thinking about it as an interesting investment, like an alternative investment opportunity. It was kind of like the middle of 2021. So when I had started I was just DCAing into literally like I pulled up probably like CoinGecko, and then I pulled up like it was like the top 20, or yeah, I'm not even joking, like the top 15 or 20 names, and then I would just DCA into all of them. And like I said, the timing was by pure coincidence. And it was around like September or October where I pulled up my pro. I think I was even using Celsius as like my custodian. So
Oh
I pulled
wow.
up my
Yeah.
profile, and I was like, "Whoa, what happened here?" Um, like I actually remember specifically like Polkadot. It literally went up like 6 or 7 times for my cost basis, and I was like, "What just happened?" Okay, and I was shocked at the. Obviously, it wasn't in significant size. It was significant for me at the time, but it wasn't like life changing money or anything. I was like just surprised by the incredible volatility that had happened. And looking back at it now, I had managed to perfectly capture effectively like that trough in the summer in between the peaks of Q1 and Q4. And then when I started looking at crypto again, it was like on its way up in terms of that second peak. And so it was just, yeah, happened to be like literally the micro perfect time to get into crypto, which was kind of that summer trough. So yeah, it was through that I kind of got into crypto, and I started I wrote my first thread. I think it was in October of 2021.
Mm-hmm.
I wrote a thread about kind of these ohm coins, and I postured this theory that the value of the coin was effectively a levered bet on the value of the underlying reserve. But since some of these coins would hold its own LP as a reserve, as a coin in the reserve, that these coins were actually much more volatile than they appeared. And so yeah, that there was like this whole like very, very long thread. Like, you think my threads are long now? Like, that was
I'll have to see. Is it still up?
yeah, it's slow. It's
Is
slow
that
up. I
that's
think
up? Yeah.
yeah, I like my most like long and I guess like notable threads. They're in like my highlight section of my Twitter. And I had literally like zero followers. I was
Yeah.
following like zero, like 100 people or 200 people. And then I remember like I posted that thread. It was funny because the way that I write threads now is exactly the same way that I write threads before, which is I actually, I don't think a lot of people know this, but I actually write all my threads in one go. So like, first of all, like
Interesting.
I don't write on like an alternative word app. I literally write on
On Twitter.
Twitter. And then
Uh-huh.
but back then you had like a character limit. So I would literally just
Yeah.
like press the plus button and then open it up to the new one, and then I would just continue writing. So I would continue. I write, and effectively, I don't stop. I don't stop writing until I finish. So it's just all in one go,
Mm-hmm.
and I don't edit. I just it's like complete first take. I actually don't edit. I don't check for spelling. So I just like
So straight up freestyle, straight up,
complete
like
freestyle.
off the top.
Exactly. Yeah. And then I posted it, and I remember I posted it and I didn't think of too much of it, and then I wake up and my account just got like 1K followers overnight, and that was the first time I thought like, wow, this Twitter thing could be a thing.
Yeah. Yeah. Interesting. So we were talking about like evolution, right? And when you first, how did you start developing frameworks? Like you said, you wrote your first thread, and correct me if I'm wrong, but you have like investment banking experience. Is that something that you tied in together? Like, how did you start developing these frameworks?
That's a good question. I think I was more naive back in 2021. So yeah, like I would say as I've gotten deeper in my professional career and I've gained more life experience as well, that has transformed maybe like my world lens, which also includes crypto. But back then, I think I was much more likely to think of assets in a vacuum. So I was more interested in ascertaining kind of the intrinsic value of an asset,
Mm-hmm.
and possibly not really being as considerate of things that I weigh very heavily today, which is positioning, flows at the margin, relative valuation, situational components, like kind of, yeah, that fall, yeah, the list, the items in that list kind of fall into. But back then, it was much more stoic. It was, viewing things in a vacuum, and so I think that was useful for the meta at the time, and the type of coins that I was interested in looking at, which were mostly DeFi oriented. And yeah, I think I just, as my thinking outside trading evolved, it
Mm-hmm.
naturally, my in trading thoughts evolved at the same time.
Interesting. And so, like, as you were evolving your strategy or how you look at the markets, were you incorporating other people's viewpoints, or were you learning from other people, or how much weight did you put on that? Because I mean, right now there's so many people giving their thoughts on Twitter, and there's a way to curate that and look for, I guess, for lack of a better word, like the right kind of information. How did you approach that? Because there's so much out there.
Yeah, there's a good story here. So this isn't even specific to crypto. This is just me. So I'll say this, like growing up, all the way back from college, but especially the case in my professional career, there were always like things that I saw, yeah, just like things that with ideas that would just pop into my head, or yeah, different. I don't even know how to explain. I don't know how to explain concisely. Just like different ways of looking at things than my peers would, right? And I don't mean to say that. Yeah, I don't mean to say that like arrogantly. It's just it's almost a bit of like, yeah, I mean, I think I have ADHD, so it was like it was like a ring of like maybe like not actually the most productive thoughts, but things would just like pop into my head. And kind of at first when I was earlier on my professional career, and I just, you're at the bottom of the totem pole, you're kind of more of like a mule, or you're or kind of like the hands and arms of the people who are more senior than you. So you're getting paid to do, not really getting paid to think. And then, as I got deeper into my career and being able to think mattered much more. And I, had some great mentors. And again, this is not crypto, just professionally along the way, I realized that, and I was able to go confidence that, hey, some of these thoughts that I have, maybe I'm not crazy. Like maybe there's value there, and I should be more confident in the way that I view the world. And I think like once that part of me got unleashed, I would say like in the professional realm, and started getting more valued by people that I viewed very well and respected. I just, yeah, like at some point along the way, I just started listening to myself a little bit more and trusting my own intuition. And I think that correlated into crypto as well, because I think I would always have this like sixth sense or maybe like different view or different framework that kind of just came together. And it's been kind of like this game, this push-pull game of like testing my mettle against the market or other people's views and seeing who would win out. And once I was able to, or not once, but over time in the last 6 or 8 months, as I've taken trading more seriously, as I've been able to kind of add small things to my repertoire closer to like the training part of like the actual like technical aspect of trading. Because like I said, I'm very new. So, a lot of things that might be obvious to other people just aren't obvious to me. Once I was able to fix a few leaks here and there, I feel like my performance has improved as a result of that. But I would say kind of like the backbone of that was just, yeah, was just, I guess like just, yeah, the way that I think.
Yeah, thanks for sharing that. And I'd like to go into this a little bit further. Do you find yourself inadvertently ending up being a contrarian in most instances? And if so, like, how do you balance that out? Or do you look to balance it out at all?
I don't think I look to be contrarian. Yeah, in fact, I don't view that as like, I don't think that just being on the hilt / being contrarian is a winning strategy. I just think that like what other people value and weigh in their analysis is just not what I care about. And I often reach different conclusions as a result of that. But that is, yeah, but that I would say like that's mostly a function of that, which is, and I'm not, and I think the best way to frame it is because I think the majority of people, they view price as being price as being both an input and an output,
Right.
which is to say that, momentum carries itself. People care a lot about stuff like EMAs. yeah, things of that nature. And honestly, like there's a lot of times where I trade and I don't even look at the chart, or like I'm very like insensitive to the price. And
Right.
I'm just like much more thoughtful of the underlying idea or flow. And so, yeah, I mean, oftentimes that may have led to different conclusions in the past, but I wouldn't say that's intentional.
Yeah, that makes sense. That makes sense. And do you look to triangulate your views at all, or do you take into consideration anyone else's views for that matter?
Humbly, no.
Okay. Yeah.
If Yeah, I mean, I think at the start when I was more junior, which is, I mean, that is like, like I said, that was only like that was not even a full year ago. Um, yeah, I'll put it this way: like, I am I'm always open to other people's thoughts
Mm-hmm.
in terms of challenging my own, either from like a framework or a positioning perspective, 24/7, all the time. But I would say that's more elastic to whether or not like I'm missing something, rather than I guess like contrasting the outputs, which is right. Like maybe like I'm short position and I'm biased because of this, and someone might be long or short, whatever, and I don't really care, if I'm honest, where they
Right.
have ended up to. But I would be
Right.
curious as to the inputs that drove that direction, right? And I might take that into consideration. But yeah, like, but and then the natural issue being that on mediums like Twitter, you really only see the output, and so
Yes.
because of that, yeah, I don't really weigh that much at all.
Yeah, fair enough, man. I like that. I think a lot of people struggle with, at least people that have DM'd me, and probably some people listening in, they struggle with building confidence in their own thought process and framework. And
Mhm.
so, what advice would you give these people? Like, is it results based, or like how does one develop confidence in themselves?
Yeah, that's a great question. I think for me, so I used to play a lot of poker. And I would say this, like, I'm very confident even today in my poker playing ability. I would say I am I'm definitely under like the level of guys like Evan, as a six, for example, or pros like Bob or Brian Rast for sure. Like they're and I'm not and I don't, I'm not even close, right? Like, let's just be clear, you know. Uh, but I was competitive, and I used poker as a way to pay tuition, go through school, and I played it for many years. And so one of the biggest things that I have taken away from poker, I mean, there's many things, but one of the biggest things I've taken away in terms of translating to trading is the notion of I'll actually name two things. The first thing being that the outcome is and can be very independent from the process. That's the first thing. And the second thing
Mhm.
is that the the in poker we have this concept called leaks, which is like, how do I put it? It's like little behavioral or technical gaps that occur either due to lazy heuristics or
Mhm.
or a mistake in judgment that that populate in regular and that populate. And I'll get into what I mean by those. But in terms of the first thing, which is saying that, yeah, just because you, in the very simplest sense, just because you made money, it doesn't mean that you made like the right play. And just because you lost money, it doesn't mean that
Right.
you played poorly, because variance happens all the time, especially in a game like poker. And poker is also a game of imperfect information, and being able to make the best decision despite not having all the information available. And trading is really just an extension of that, I feel. And so going back to the first point, yeah, sometimes you will make money doing the wrong thing. And so being very result oriented and thinking like, oh, I made money here, and then I lost money here. I'm on a downswing, so I must not be doing something right. It's very easy to get into your own head, I would say, unless you have like a very structural way of thinking about what you did to make money and what you did to lose money. And I would say in terms of the second thing, yeah, we're talking about leaks. This is a very, very big thing. And this is like one way that I've been able to, I would say, like maintain regular improvement, which is that, as human beings, we are very naturally like very sensationalist toward big outcomes, and typically, very accustomed to ignoring kind of small ones, which is to say, like in poker, if you lose a big hand, that kind of memory sticks with you. And it's just very easy to always like kind of recall that memory. And, it's very easy to like overthink about it. And then like the hands in poker were like, maybe you're not losing a lot of money each time you play that type of hand. But in reality, those type of hands actually probably occur much more frequently and much more regular than those very like unique circumstances in which you lose a lot of money, for example, right? So, a great way to frame it is like having a small pocket pair out of position on the poker table, right? Like playing in the small blind. You'll probably get in a situation like that a lot more than these like random, really, really big hands where you might get stacked. But the way that our brain works, like we're just more naturally wired to think about these really big hands because we're so emotionally invested in them, when it would actually behoove us to think more about improving those leaks that actually occur much more often. But like I said, maybe you don't lose that much money per time that it happens. So having those two fundamentals, I would say, has been, it's been very fruitful for me to, one, know that I'm making regular improvement in my process, and two, just like not be very emotionally like influenced or affected by outcomes if I know that my process is sound.
Yeah, thank you for laying that out so deliberately. And I think what you're referring to there's resulting, and I think for anyone listening in, it's huge to think about process versus outcome. And just adding my 2 cents in terms of improvement, I think I've also skewed towards cutting out the fat, right? Actually trying improvement can also look like figuring out what you're doing wrong and trying to eliminate that from your process versus trying to improve the process per se or refine the process in the other direction. So you can approach it from both directions. And I want to pivot here a little bit. There's a few quotes or ideas that I wanted to get your thoughts on.
Sure.
And the first one being reflexivity. How important of a role do you think reflexivity has specifically in terms of crypto, and how do you view reflexivity, and what are your thoughts on that?
Yeah, so what I'm about to say, it's going to start off borrowed off of a friend of mine, and then I'll layer in my own thoughts. So my friend once told me crypto is simultaneously both the most liquid yet most inefficient market that exists today. And my interpretation of this is a lot of the assets that, let's call it crypto Twitter, or that I'll use colloquially we are interested in, or frankly, assets that move a lot on very low amounts of liquidity or dry powder, relative to contemporary assets. And so reflexivity matters much more in assets like this. And you can really see that. I mean, I'm going to use an example where I lost a lot of money, the most amount of money I've ever lost, which was this Trump trade, this like Trump short that I put on. I mean, that was a great example of reflexivity. And yeah, I would say like one of my weaknesses, or something that I don't say I'm bad at it. It's just something that I consistently underestimate, and I don't seem to be able to size appropriately, is buy side reflexivity in that kind of like parabolic sense. Like I'm much more of like a supply side, sell side, kind of it's just a little bit more quantifiable. And I think I'm getting better at reasoning kind of buy side flows or heuristics. But yeah, I mean, it's always surprising, stuff like that, like stuff like Trump, right? Like there are no clear precedents. I mean, we've never had something run up from 0 to 80 billion in the span of 2 or 3 days. Like there just hasn't been a precedent for that until that happened. And so,
Right.
yeah, I don't think it was necessarily unreasonable for me to not to be wrong on that. But at the same time, yeah, I mean, that was just a very clean example of how crazy reflexivity can be.
Yeah, absolutely. And a segue to a quote that I want to get your thoughts on is a quote by Warren Buffett, which is well known. Diversification may preserve wealth, but concentration builds wealth. And I wanted to tie that in with what your views are in terms of growing a stack as you're, going through your journey as well. What you've learned in terms of growing your stack. If you have a small portfolio, for anyone listening in, what advice would you give, and what do you think about that statement?
So I have an answer to that. I will caveat that, like my advice, I can only speak to what I know. So, my circumstance is obviously going to be very difficult than someone else's, right? Because like I have a fallback option. Like I'm a wagey, as Bull Trapper Zero would say. So
Wait, hold up. What's the deal with that guy? Why is like?
I have no beef with that. I don't know. I have no problem with Bull Trapper Zero. I've never said anything negative about him.
Yeah.
Yeah, he's a funny guy actually. I don't mind what he types at all. But yeah, well, going back to my point, it's just like I do have a fallback option, right? So that's number one. And number two, like I just yeah, in terms of like what works for me, I cannot ascribe as to like that rhyme or reason work for other people. In fact, like I'll say this, like the way that I trade, like the way that I think and trade, I don't think anyone really, again, and humbly, I don't think anyone really like does it the same way. Like for example, like I don't really take that many trades. Like my average trade per day is probably closer to 0 than than any other number. Like
Right.
I just like, yeah, like I don't know. So I think I'm still kind of trailblazing a little bit in terms of like whether or not this shit works or not, if I'm being honest. So yeah, with all that being said, these are important, caveats, right? Yeah, like I would agree with that quote because, like, at the end of the day, right? Like diversification is effectively just very, it's a euphemism for taking beta, right? Or just having proximity to the market. And so if you're diversified, any direction that the market generally takes, like you are taking that level of systematic risk as well. The part where diversification actually solves for is idiosyncratic risk, right? If there's something that happens in one specific company or one specific industry and only affects that industry, well, in the case of diversification, like you would be insulated from that. So if you're someone who has a reasonable net worth and you're looking to be very hands off and looking for passive instruments that don't require much time or sophistication, then diversification is an excellent strategy, right? Because risk assets have proven over time that they do go up. But if you're looking to be much more active, then it makes sense taking more concentrated secular bets in terms of creating multiple expansion, which hopefully there is some sort of correlation between your hard work and effort and developing a variant view, and forming an asymmetric bet. And so, that is the way that I think that the world tends to work when it comes to the world of finance.
Yeah, thank you for that elaborate response. The next quote that I wanted to run by you was successful investing is anticipating the anticipation of others, which is by John Maynard Keynes. How do you view that, and how do you incorporate that in how you trade or invest?
Yeah, I would say it's a lot. Yeah, like I think a lot about positioning, a lot. I would say, yeah, like I've penned a few things this year or this last year that have really like hunted or exploited the complacent nature of others around holding. I've said this already, but I'll say it again, right? Like there wasn't much skill expression in 2021, and I think you're really seeing that be the in terms of the fallout from 2024. You've seen a lot of participants in 2021 that just haven't, they just haven't acclimated to the new environment, and it's just been a much more choppy market, much more turbulent, where traditional triggers just haven't worked. And so, having realized that, and the exposure that certain participants have to certain assets, that was really, I would say, like the genesis for my short ideas around Ethereum and Solana, around August and December, respectively, in 2024.
That makes sense. And then last but not least, there's this quote from Thinking Fast and Slow. It's the illusion that we understand the past fosters overconfidence in our ability to predict the future.
I read that book. I don't remember that quote though. I mean, this is another quote that is stolen from a friend. It's the same friend that I stole the other quote from. But he told me, it's a battle every day to be sharp and humble. And so, like I would say, like I'm a very like boring individual with respect to my day to day. I don't really change much. Some of that's by intention. Some of that is from laziness. But I don't really think too much, to be honest, about past success or failure when it comes to looking toward the future. I said this before, but I think investing is much more similar to like being an athlete than anything else, because of two reasons. Like, the first reason being that like how you practice translates to how you perform. And so you need to get reps, doing everything, right? Like you need to get reps
Absolutely.
shooting the ball. You need to get reps passing the ball. You need, in terms of basketball, right? Like you need to get reps dribbling the ball. If you only work on one thing, then when it gets time to execute in a more like high pressure, high tempo situation, like you can't expect yourself to be able to like reproduce, your best, right? Like you just don't have those reps. And also at the same time, like you don't want one mistake or one. Like basketball is a great example because it's a very fast paced game, right? Like each team, each player takes turns scoring. So like you can't like really think too much about like how you just scored, or like how beautiful your shot just was, or how ugly it was, and then have that affect your confidence, your ability to execute in the rest of the game, right? Because it's a long game. There's 4 quarters. So from that notion, I definitely I just don't really think too much of it. I just take every day as a new day, whether or not the past day was good or bad.
Yeah, no, that's a great mentality. And digging just a little bit deeper or in a different direction, actually, how would you view that in the framework of the market? Because a lot of people use the past, past cycles, past whatever, as precedents for what's going to happen in the future. And hey, like, cycle theory or fractals and
Sure.
Things of that nature. What do you think about that?
Yeah, I mean, I think there's like, I think that there is an extent to which certain things have in the past can be replicable or useful for the future. But I think context matters much more
Absolutely.
than perhaps like CT is used to seeing it. And that goes a little bit with my personal philosophy, which is, I said earlier in this chat I was being a little bit facetious, but I really don't look at charts that much. Like I'll look at flows, I'll look at OI, but like I really
Right.
don't care that much about price. Whereas it's very interesting because cycle theory and microstructure and how that how there might be like fractals forming. I mean, that's all around this notion that, you know, quote unquote, it's in the charts, or price, or that it's like absorbed into the price that we see. And so there's a time and place. I would say that that's the way to put it. Like, I don't really have a hard answer, and I understand this, like, it's a little bit squishy, but there are times where it matters, and then there are times that it doesn't. And you know, like, I think, for example, like, for these like one-time events for like the Ethereum approval for the ETF and for BTC, you know, that might be interesting. But in terms of just expanding and hope and thinking that, you know, every presidential election has led to X and Y effect, and like this month in terms of seasonality, it typically has this type of like month-to-month performance. Like, yeah, I put a little bit less stock into that.
Yeah, I think you boiled it down perfectly. I mean, I agree with that. And the most important thing is context matters, right? And it's all about understanding how you're applying certain frameworks and what the environment is looking like. You can't just blindly just use historical data to predict the future. And context is really important when it comes to that. Let's pivot a little bit. I wanted to get into your process a little bit more. In terms of risk management, let's start there. Like, what does risk management look like for you now compared to when you first started off? Like, what does that evolution look like?
Good question. I would say the people I talk to and my friends, I think they probably view me on like the aggressive end of risk. I think relative to others, I'm probably on the more conservative end. But it seems that as your capital size grows, there is more reticence. People are just a little bit more reticent toward using leverage. I view leverage. Yeah, leverage is interesting to me. It's been a challenge, you know, because I'll say this, right? Like, there was a time period in between me returning, because I took a break from crypto Twitter. I took a break to really focus on my career. You know, during a really important inflection point, and it just happened to coincide with, honestly, like the bear market during crypto too, where things became less interesting, and it was kind of like a no-brainer, or just like in terms of focusing on the former. But there was a period of time in between, like when I came back, which was like December of 2023 or November, up until like May of 2024, where I was experimenting, you know, with leverage and trading, and I was not doing well. Like, during those like 4 or 5 months, like I was blowing up. I had no idea what I was doing. Yeah, like, going back to, you know, something I mentioned earlier, I felt like my ideas may have been like a little bit more sound, but there was just something from a trading and execution perspective that just was not doing well. And like I said, I hadn't, you know, for something I do now, for example, is like I keep like a diary of like my mistakes, and I try to review those and write in them when I feel like I've triangulated something poignant. So I wasn't doing any of that. I was just like very undisciplined, and like I was just effectively, I think, you know, going back, I was just gambling. I was just trying to get lucky and hit effectively like the equivalent of, you know, 4 blackjacks in a row, and hoping that I could make it that way.
Right.
And once I like pivoted away from that mindset, and I like really toned down the leverage, and this is something that like I talk about when I stream. At one point, I just said, you know what, like I need to figure out like what I'm trying to do here. Like, am I trying to like, because if I care about having longevity in this game, and actually developing something that is sustainable over time, like I just need to figure out whether or not I'm more right than wrong. And like I can only really work on one thing at a time. So let's work on this first. So I just toned down the leverage completely. I wasn't like, and this was after like the Ethereum ETF, because I ended up being very correct in terms of the drawdown, but the trade
Right.
itself was very, very, very mismanaged. It was just, yeah, the end result was quite disappointing, actually.
If you don't mind me asking, what kind of leverage are we talking? Like,
Yeah, I mean, at the time, it was like, man, I want to say like 20 times, something crazy like that. Yeah.
Damn. Okay.
Yeah, something crazy like
Okay.
that. Yeah, it probably ended up being like 50 times at the peak where I was like experiencing my drawdown. Yeah, because I took like an 80% drawdown to start the Ethereum ETF before it went up. Before like I at the end of the day, I had recovered my position fully, plus made quite a decent margin on the initial, but it was effectively like taking an 80% drawdown and then making like 500% afterward. So yeah, the net was not that much, but yeah, that was really like I would say like the fulcrum for me. Like that was like my first real bite of success at the Apple, which was like, okay, I just penned something that no one agreed with, that ended up being right in a magnificent way. But, and I think someone like Ackman or Soros said this, like, it doesn't matter how you're right or when you're right, something like that, but it matters how much you make when you're right. And so I was just so disappointed with the result that I was like, yeah, like I need to figure this shit out. And like, I don't think I'm able to like figure out so many things at once. So let me just tone that shit back, figure out, yeah, like my rhyme or reason. And then as I get more comfortable with knowing my spots, tying together like my conviction or like duration of a trade with the sizing, then I can like start implementing leverage a bit more. So yeah, from a timeline perspective, I would say like July, August, oversized, didn't capitalize. September, still trying to figure it out with sizing, but kind of a wash. And then October really started gaining some momentum personally, but was undersizing because I was being very cautious with leverage. November, kind of the same story, although it was a little bit better. And then December was when I started getting, it was a kind of that perfect balance where I felt like everything was coming in together, and I was gaining confidence with, so at that time I was probably closer to like 1 or 2 times leverage, and I'm being able to jam it in. And then, yeah, in December and January, those are probably my best months, where, I have now gone up to roughly maybe like 2 to 5 times leverage, 5 at like being the absolute max that I would use and have used, where I would be comfortable with over like maybe a swing trade. So that's kind of where I'm at now.
Awesome. Yeah, thanks for sharing that. And throughout this conversation, you've alluded to losses, and you've kind of talked about this already. But how do you deal with losses or a series of losses? What's your kind of thought process like in terms of approaching that? Do you step away for a while? Like, what's your general thought process of approaching that?
Yeah, it's interesting because, naturally, 2024, I would say like the majority of what I've done well in has probably been on the short side. So I'm quite used to taking a drawdown, but I would say, yeah, I'm very comfortable in a drawdown. I would say that I'm very comfortable. I would say like the only time that I've truly been affected or like emotionally affected or having a little bit of anxiety with my positioning has been 3 times in the last 8 months. The first time was around the Ethereum ETF. I was like very, very short. I mean, I already talked about it, right? But I was very short and I was very overexposed. And I honestly was probably like a tick away. Oh, no, not like a tick away, but I was definitely close to getting, I was like having, like, I could have been liquidated, right? Like I was actually like, I definitely could have been liquidated, but I didn't.
Were you adding margin, by the way? Were you adding margin?
Was I adding margin? No, I wasn't.
Were you adding to your position? No, you weren't. Okay.
Yeah, I wasn't adding. I was like, okay, if I get liquidated, I get liquidated. But yeah, so I was. I don't think I've ever been more. Yeah, that was like that was the peak of being like, do I even? But I kept to remember, right? This was like my first real Like,
Right.
like, am I like this is I'm forming a view.
Right.
Is this right or not? Right. So it was like the peak of not, like I said, because over time I've grown confidence in my trad abilities, but this was my first
Mhm.
time where I really tried to initiate something that was unique and endemic to crypto. And so yeah, like I mean, I think that's a very natural inflection point to be nervous. And I'd say the second time was when I was very short, near the end of November and the beginning of December, and I didn't close my shorts when we had that initial BTC wipe, or like that drawdown to 91K where like only BTC fell and like nothing else fell with it. And my reasoning was, when we broke 100K for the first time, that was through the use of leverage, but that was very contained for BTC. I mean, BTC went to like 105, right? So that was very contained to BTC. And so I felt like the next day was just, it was obvious that there was going to be like a mean recursion component to BTC, and it fell, but nothing else fell at the same time, like I said. So I held my shorts and experienced that chop and volatility for like another week before we actually just got like a complete wipe on everything. Very very similar to that March leverage wipe, and so that's where I took profit. But I was like, that was a little bit of nervousness for me, but like not because of the reasons from the first situation, just because I was like thinking to myself like, I had an opportunity to close, I didn't take it because I thought that there would be more. But I'm very happy with that because, yeah, staying true to what I felt. And again, another demonstration of, hey, maybe I know what I'm doing.
Got
So
it.
those were like the first
Yeah.
two times, and then the third time was like, yeah, the Trump thing that just happened. That was like my
Mhm.
biggest like loss ever. But yeah, I recovered from that one like very very quickly. It didn't really affect me at all.
Got it. Just so I guess to sum it up, in terms of dealing with losses, like you don't really, you're comfortable. You're fairly comfortable with being in a drawdown because you have conviction in your process.
Yeah, I'll put it that way. I think I just like is more even like broadly as an extension. Like I'm just so used to failing and in other
Right.
aspects of my life that have, yeah, that mean much more than just numbers on a screen.
That makes sense.
And yeah, like I've failed in such spectacular manners previously that, yeah, maybe I'm just a little bit desensitized to just
Yeah.
like rad PNL probably.
Makes sense. Makes sense. So let's see. What I wanted to ask you was, what do you think you struggle with the most in terms of managing your portfolio, and how do you remediate what you feel like you're bad at? And on the opposite end, what do you believe are your strengths when it comes to your approach to the market? And we've touched on these things already, but maybe you can elaborate a little bit more.
Oh, my weaknesses. There's so many. I have to really think about which one I want to talk about. I would say, yeah, I mean there are weaknesses that I have, but some of them are more like natural structural disadvantages, like with respect to like my personal investing philosophy. So like I
Hmm.
don't there are some that like I just think are always going to be like persistent over time in terms of like losing, like in terms of like having, in terms of like not maybe fully capturing like the right tail aspect of crypto. Like I don't really view them as weaknesses. They're just more like natural, like, yeah, they're just like the natural disadvantages, which are just like I'm not really a dreamer. So my stance is like I'd much more prefer hitting like 10 singles than like striking out on 9 and then hitting a home run. And so from like an absolute P&L perspective, like I am not going to perform, I already like I'm not going to perform the best when everyone else is printing. Like I'm just like, that's just not me. But right, like I strive to be able to create, you know, to be able to like create returns that are uncorrelated and and form like, relatively, relative to others. I'll put it that way, relative to others. And so, yeah, that will come in the form of just like, not being able to like fully capture, something when it goes very parabolic. And that's probably a weakness. And I've talked about it before, but underestimating, buy-side reflexivity, that's been a weakness of mine in the past. I don't think I'm a particularly good like name selector as well. So I actually think that my strengths are like, my strength and weaknesses are almost like inverse that to like Arthur 0x, for example, in Defiance. Because I perceive Arthur as being like a very keen, sharp name selector. They do a lot of research on one name, and they have like a very high time frame view on it, and they'll probably generate like a 5 or 10x. They've had a lot of success with that in the past with stuff like Aave, or Sushi, for example. But that's really not me. Like, I am much more different. I think I care much more about the path dependency on something rather than the ultimate destination. And as a result of that, that's kind of where some of my strengths lie as well, which is, I think I'm very agile. I think that, like very agile, quick to update my bias with respect to new information. And I work hard. I think I've always had the belief that putting in the work will generate a positive outcome. And another something I talked about earlier, which is I think I have good emotional, good systems in place to manage my emotions, which is half the battle, I think, when it comes to trading. So I would say those are some of my strengths.
Absolutely. And it's interesting that when I asked you what you struggle with, you immediately went to, hey, like there's a lot of things, and which one should I talk about? And for anyone listening, I think most of these conversations that I've had, the underlying kind of theme has been, people who have conviction in their process and understand their strengths, but are also well aware of the things that they're not so good at. And I think that's really important, especially when you're dealing with an uncertain dynamic environment. And to segue here a little bit, there's a quote in Thinking in Bets, and it goes, all decisions are bets and life is poker, not chess. So how do you think you can become better at weighing out probabilities and determining expected value? Do you have like a results-based process? Do you journal? Like, how do you do that?
I think that is much more as a result of being open-minded and introspective with oneself. I think there's a lot of people who think that they're flexible,
Right.
but they're really not. And the best way that I can illustrate this and answer this question, in my usual roundabout way, of course, is, you take a man and he's about to go to a job interview, and he has a suit on, right? Like he's looking very presentable. And on his way, he notices, or he doesn't notice rather, he like a big chunk of paint falls on top of him, like black paint, as he's walking to the interview. Right. So now he's fucked. He has to decide between going to the interview and being on time, but being covered in paint, or going back and changing, but likely being late for the interview. And so he curses out the world, right? He's just like, oh, I got so unlucky. Of course, like, why does this always happen to me? Like, he's one way of putting that is he is externalizing his failure, or his but most people probably wouldn't call it failure at this point in time. They'd probably chalk it up to being unlucky. Right. But let's rewind that, and in this situation, let's say that this guy was looking at his iPhone, he was listening to music, he was just not being very alert. And had he been more alert, he could have realized that he opted into walking on the side of the street where there was scaffolding and ladders and people working on painting, one of these buildings. But the other side of the street was clean, right? So whose fault is it really? Because he didn't really pay attention, and he kept walking on the side of the street where there could have been a chance for that poor outcome to happen and that paint to drop on him. but he didn't take into account, and he wasn't very alert. But had he been more, he could have easily changed streets to avoid the chance of that even happening in the first place. So yeah, I'll I'll answer that question with that example, which I know doesn't actually answer it.
No, I think
But
that's a great example. I think that was
yeah.
great. So we're talking about failure, and I promise this is the last book reference, but this book is amazing. It's called Best Loser Wins by Tom Hoogard, and I really, I don't really recommend a lot of books, but I think this one I've talked ad nauseum about it basically every episode that I've recorded. But it talks about how important it is to be able to accept losses and not have your ego tied to the market. What qualities do you think are key for a trader or anyone taking part in financial speculation to be successful? Like, what would be what traits do you think are important?
Hmm. Yeah, I would say in excess of the ones that we have already talked about, to keep this answer interesting, I would say, yeah, I would say the market always finds a way to humble hubris and bias. It always finds a way, and whether or not it blows up in one spectacular trade, or whether you're getting away with something that is actually quite risky, but in the meantime, like, you're actually building very bad habits, and you haven't been affected by it yet, but at some point it will be. Yeah, like being able to distinguish your outcome to luck, to what is luck and to what is not, is something that I truly don't believe that many participants have actually connected to. I'll put it that way.
Agreed. Great answer. Great answer. All right, let's shift and get to your thoughts on the market currently. So yesterday I posted I think it was yesterday. I posted a tweet. I was just curious. Posted a poll asking how much of your portfolio is in stables currently, and I got almost 8,500 votes for
Nice.
0 to 25, and 0 to 25% was 62%. In terms of being in how much of your portfolio is in stables. And so I wanted to get your thoughts on the market currently, short term and longer term. Like, what are your general thoughts, especially, we just had FOMC earlier today. What are your general thoughts on the market currently?
Yeah, I think I'm probably like still triangulating a few things. I would say, yeah, like I did a stream last week. I'll probably write a thread at some point to really, one, I guess, like, be accountable for the stuff that I'm saying, and two, just really like synthesize everything together.
Right.
I would say, to put it bluntly, I think I am pretty bearish on low time frame basis, but I'm a little bit more bullish on a high time frame basis. So I'll frame it this way. I think right now we're in this weird like white noise / black space, where the reverb of what we just heard with respect to positive government regulation is of the drivers of substance that can push for a positive outcome for bulls are quite scarce and far and few in between. So I'll list a few things. So this last week that we had with respect to the EO, SAB 121 being repealed, the Trump meme coin, from like both a retail and institutional perspective, like there is no week. There's simply like no week outside of the government announcing that they're buying Bitcoin that can surpass the one that we just had in terms of front running and expectations of being loaded in.
Yeah.
It's just there's just nothing that can beat that, right? So that was to some extent an event that definitely drew some conjecture, and I actually think that it was I mean, these last 2 weeks have been really interesting because I think normally, if in a normal world, we probably should have hit higher last week than we actually did. Like I think we probably should have hit 110 plus in terms of if there was like a more normal cycle of speculation, but because there was that DOJ scare that initially happened, maybe like a week before that, and that the initial ascent or acceleration from 70K had been so fast. I think that these like 10 to 12 weeks have been so fast and furious that you know there's just a level of like inertia in markets, right? So like we went from A to B in a very, very quick time. And
Right.
we are all free to extrapolate why in hindsight. And one potential reason may have been the front running of events that occurred last week. And just like, logically, the president made a meme coin that went from 0 to 80. We got SBR, Y coin, like SBR light. Yeah, like again, there just is not going to be a week in the near term that is going to surpass that with respect to a catalyst or something that people can look forward to. And then from a broader scale, we are all free to speculate, but I do not believe that the picture for liquidity is that promising. I don't believe that Saylor will be as transformative as a participant that he was in November in terms of governing direction. And so for those reasons, I'm a little bit more bearish. But on a high time frame basis, I don't think that we can completely dispel the notion of the government buying Bitcoin. And it does seem that the digital asset stockpile is a matter of time rather than it's more of a matter of when rather than if. Right? So, I think GCR at some point said, he believes that Bitcoin will flip gold, and I don't think I've ever really truly subscribed to that theory, but maybe after last week, I have a bit more. So I would say like that is kind of where I'm at.
Got it. And speaking of higher time frame thoughts, there's like this thought process that I've seen circulating around for a while that this is the last cycle in crypto where you can make it big, alluding to the institutional flow and all that stuff. So what do you think about that?
I don't think people are going to like my answer, but I'll say it anyway. I think so. Let's start off with this. I definitely don't think that it's going to be like the last cycle with respect to having like really attractive multiple opportunities for your net worth. And I think that this industry is going to be around for a long time, long time. And I think that heightened volatility with actually, maybe like I'll start this with a much more positive note first, just to cushion the later part of this answer. I think our parents, they were subjected to the greatest like transfer of wealth during their time, being something like real estate, right? In terms of being able to like move social tiers or social classes. I think for our generation, it is almost definitely going to be crypto. I think there's a level of permanence to this industry that is not going to go away anytime soon, especially with the traction that we've developed in the last 2 years. However, I think that more and more of the industry is going to get absorbed away by people who are much more sharp than you and I. And I think that this may be the last cycle or last like point in time effectively where I mean, you're already seeing decay of the strategy, which is like to buy recklessly and to hope that holding it
Yeah.
is going to
Yeah.
do well, right?
Right.
So put another way, I think that like the ability to just be stupid and win, I don't think is going to be winning anymore. And I think it already has, yeah, like I said, it's already shown decay.
Yeah, I agree with that thought process. I mean, with the amount of dispersion we've had this cycle, I think, you know, do you believe that some of that stuff or most of it will get wiped out in the near future?
I mean, I think that's a good thing, if I'm being honest, because, you know, like, for example, like in any other industry that we've ever seen, like in terms of like, you know, call it contemporary equities, right? Like there's always like a cycle, there's always like capital structure cycles where bad businesses, fraudulent businesses, poorly capitalized businesses, they get either
Hmm.
bought up or go bankrupt.
Right.
And during that period of time, you know, yes, there is like recessionary effects or a depression associated with that, but it makes like the businesses who are able to develop a moat, or you know, develop some portion, some aspect about their business that can create, you know, like a differentiated competitive positioning. It makes them much more valuable like in the future, right? Like we've seen that already with stuff like, you know, in the Mag 7, for example, like Amazon, great example. And so I don't know why that, you know, why we should expect crypto to be any different, which is, you know, like bad coins, bad VCs, you know, they will get washed away. And I think that letting that happen rather than trying to save them is is like very net positive. And like the faster that we can accelerate creating like this dispersion of like winners and losers,
Hmm.
I personally think is like it's a net positive toward, you know, creating more legitimacy in the industry.
Agreed. What do you have any narratives that you're keeping your eye on right now? Like, or do you view the market in that way? Like, do you look at AI, RWAs, or do you track those by any chance? Or like, are there any narratives that you're keeping your eye on right now?
I think I'll just keep this. I think I'll just keep this punchy and probably just say no. You know, I'm like much more directionally influenced rather than, yeah. Obviously, there are like some verticals that I keep in touch around. You know, like I'm not. Yeah, like, I'm not like. Yeah, I don't live under a rock. But I would say, like, I don't think. Yeah, I don't really think top down in the sense of like, oh, where are the verticals that I think are the most promising. I know that some people do that. You know, they'll probably be like, oh, I want to be in AI, I want to be in DSCI, and so like, what are the best assets in this vertical to get in? And yeah, I mean that's a valid way of thinking. I mean that's just not how I think. So yeah, like I'll just answer with that. And you know, like I think you know, generally speaking, I keep most of my like ideas just very high level to begin with, right? Like I don't really talk about like one specific asset or coin, and that's a bit intentional. And so I'll keep that same energy here too.
Yeah, no, that makes sense. All right, let's go to audience questions, which I did post something, which typically I post the day in advance, but this time I was definitely late with it. And people love to comment when otherwise, but whenever I ask for questions, I only get a handful. Let's see what we have here. I have one question here. Any thoughts regarding QE setting in late 2025, early 2026, and us receiving some sporadic mini all seasons across different
Super,
sectors?
super possible. I think that's a great way of looking at it. Actually, I think that is like definitely possible. Yeah, 100%. I mean, I was thinking along, I was like kind of gravitating toward this concept myself as well. You know, because QT is undying. It's, you know, it's already slowly trailing off. I think people have like a misconception of how like these reverse repo facilities and yeah, just all these liquidity facilities, like how they actually work, like TJA in reality. But yeah, that's kind of like a little bit of a reason too to think that the next, call it Q1 and Q2, you know, it might be a little bit tight with respect to liquidity. Might be a little bit of a scare when it comes to equities, stuff that, you know, Bitcoin and digital assets typically have beta 2. But yeah, the longer you go down in 2025, the more that we're in the innings of 2026, there will just be, more, I think, reservoirs of liquidity that can be tapped. There will be, again, like that ephemeral chance that the digital asset stockpile becomes more of a reality, or that Bitcoin is actually being bought. I would say that the probability of that increases with time, right? So, yeah, I think there's a lot of things that a bull can get excited about in the rear view mirror, but I don't think any of them are imminent.
All right. And the second part of that question is a double top structure with a bearish summer again, or anything of the like. Thoughts?
Sorry, what was that?
It's it wasn't. It's more of a statement than a question, but it's the second part of the comment is a double top structure with a bearish summer again, or anything of the like.
Okay. So alluding to like how 2021 looked. Got it.
Yes. Yeah.
Yeah, I mean that's possible. Although I don't. I think but like the peak for 2021 and even like 2024, like that was in March, right? That was like March, April, I think.
Yeah, I believe so. Yeah.
So maybe I will. My answer is that maybe like that peak has shifted to the left, and we've already seen it, which is probably not what anyone wants to hear. That's probably that's where I'm at. I don't know if I'm right, but that's kind of like where I'm guiding around. So,
all right, so that should answer that question from Drew MZTV1. Thank you for submitting that question. We have a few other nonsensical ones, and I'll just throw them out there. Fartcoin to 69.420. Question.
I think that's unlikely, but I could be wrong. I was wrong with Trump, so could be wrong on that too. I would say like Fartcoin, right. It's interesting. I'll actually answer this question seriously. I think it is notable that Fartcoin was the only other coin that actually like held this ground and even like accrued value when the Trump black hole meme, like the Trump meme coin black hole was occurring that weekend. It was literally the only other meme coin it was actually not even just meme coin. It was like the only coin, like out of like majors, like all these categories, right? It was the only coin that was green during that period of time. So that's really interesting. I think that's really, really interesting. Like obviously, I'm not going to talk about price targets, but there was a level of resilience there. And I mean, I own Fartcoin, so if it gets to 69, I'll be happy.
All right, Coin Atlas. Hope that answers your question. And last but not least, why did the chicken cross the road?
To read my thread.
All right. Before I wrap up, I ask like just questions regarding like what your routine looks like right now. What does a typical day look like for you right now, and what's your current routine?
My day to day, I wake up. I think about how Bull Trapper Zero was right, and I take a shower, cold of course, and then I do my Patrick Bateman routine. Skincare is very important.
There you go.
Try to work out in the morning. Get some reps in. And then recently I've been like staying home a little bit and working from home. If not, then obviously like I take the subway again, very depressing. Thinking about like how I'm a wagey or Bull Trapper Zero, just having some free time instead. And then usually either working or at the office for some like it's very volatile. I would say like some days my days will end at 6 p.m. Some days it will be like midnight. But I'm always on my phone. Like I think anything that I can do for my computer, I can probably do for my phone. I just like can't be as tapped in with respect to like seeing charts, for example. But I don't really even look at charts that much in the first place, so it's not that big of a deal.
Right.
Like respond to like things that people are asking me in my Substack, or respond to like funny comments on Twitter, and then yeah, like I'll get home and then there's usually like I usually have like sticky notes of like things that like I want to like look at where like I can't do it at work, for example. But if I'm
Mhm.
working from home, sometimes I'll just be able to do that like throughout the day. And then obviously, yeah, and then I'll have Chipotle at some point, and then that's my day.
That's what's up. And this is a complete tangent, but what's the subway situation right now? Because I've heard like it's deteriorated rapidly in the
Oh
city.
yeah, it's bad. Yeah, I think Bull Chopper Zero is out to get me. I think he's trying to push me to the subway actually. So I'm always like trying to be alert and look for that. Looking for someone with like a clown, like a look like like dressed like a
Yeah,
clown,
the
that Jester, Joker paint on his head. I haven't found him yet though, so I think I'm good. But yeah, it's fine. I mean, I think if you're like, yeah, if you don't just if I don't honestly like, I think if you're just like not next to the subway, like literally like next to the tracks, looking down at your phone and like actually just paying attention to your surroundings, I think it's mostly fine. So
all right. All right.
yeah, maybe I'm being naive, but I've been here for a minute, so.
Yeah. Yeah. How do you reset? Like, what do you do to manage your stress? Do you have anything that you do to kind of like just calm yourself down, or what do you do for that?
Yeah, I'll go on like Fantasy Top and I'll look at Chumpa's tweets. Um, or let me think. Yeah, like yeah, I'll watch like YouTube stuff, YouTube, like anime, I'll read.
Oh, you
Um,
watch anime? Top
yeah, I
three
watch
anime.
anime.
Let's go
Top three of all time or right now?
right now. Let's do it right now. I think
Top
all
three
time
right
is difficult.
top three, what's even playing right now? Let me think. Oh, Solo Leveling, obviously. I mean, that's playing right now. Solo Leveling is really good.
Yeah.
It's really, really good. So it's strong. Um, what is even out right now? Solo Leveling. Hold
Well,
on.
it doesn't have to be right now. Whatever comes to your
Okay.
mind.
I mean, I really like
Anything you watched recently.
Full Metal Alchemist. I think is really good. The last season of My Hero Academia, or like the seventh season, is surprisingly good because it was complete ass up until this season. Um, I think Demon Slayer has really beautiful animation and fighting
Yes.
scenes, and it ties together like the art of because like yeah, because like if you're being honest, right? Like I read a lot of I read a lot of manga too, and like
Okay.
and so like anime has this like really special thing that they can do where they can really emphasize certain scenes with
Right.
like curating the music, the voice acting, the animation, of course, like the environment, all of that can really come together and make like a scene like really, really beautiful. And I would say like 99% of the time that doesn't happen. But I would say Demon Slayer has so many of these scenes, much more than any other anime, where that does happen, and it's really beautiful. Although just the story itself is a bit, it's not, it's shonen, so it's not like anything super special. But yeah, it just has those scenes which are crazy, and Jujutsu Kaisen's good too. So those are some of my picks. But those are
Yeah, the
probably my
production is phenomenal on Demon Slayer. Production's amazing.
yeah.
I can't do I can't do manga, so yeah,
Oh,
I
I
need
can't do
to
manga.
watch. Yeah, I
Yeah, I
can't.
love reading.
It's just yeah, I love reading, but I just can't do manga. I usually just watch anime. But all right.
Kaiju number 8 was
And
pretty good too.
what'd you say?
Kaiju number 8. That was pretty good.
I haven't seen that.
Oh, you should. It's
I'll
good.
have to put that on my list. I'll have to put that on my list. Do you have any plans moving forward? Like anything that you're looking to do differently, or any plans that you want to talk about? Anything that you're about to do differently, or you're gonna stick to what you've been doing?
TBD. Yeah, it's an
All
interesting.
right.
I'm at an interesting. I would say like I'm at an interesting intersection at the moment. Um, yeah, I would say like for now I'm happy with respect to. I feel like I'm consistently like challenging myself. Challenging my views. I feel like I'm growing. I think at some point when it stops getting. I mean that's why I love poker because it never felt like with a lot of other things in life, it feels like there's a certain level of mastery once you hit. It's just not as fun anymore. It gets a little
Mm-hmm.
bit more boring.
Right.
But one of the reasons I really love poker is that it never like it felt like that like ceiling like you can never really see it. And that's kind of what I'm getting from trading and investing as well. Like, it just doesn't really seem like it's there. And that's what really makes it fun. And, but if it were to ever feel like I could kind of like see that, it would probably be a little bit less fun, and maybe I would draw back a little bit. But for now, I'm just having fun with it.
Awesome. Sounds good. And to wrap it up, do you have any advice for people that are listening in? Any kind of advice. It could be life advice or whatever you want to talk about.
Yeah, it's super generic, but it's been really helpful for me. I would say, like the opportunity cost of your time is very low when you're young, but it gets exceedingly high as you get older, because as you get older, you have more responsibilities to adhere to. If you're a guy, you become a little bit more responsible for, maybe like the family that you're providing for, or your siblings or your parents. It's kind of that like masculine role that society expects. And so, when you're young, I would say like just be very open-minded and be ready to take new experiences and move out of your comfort zone. Because like realistically, when you're young, outside of crypto, for example, like if you were to get a job anywhere, like you'd be getting paid close to minimum wage, right? So, if you were to spend an hour cold emailing someone or like picking up a new skill, for example, like you have the ability and time to do that. But as you get older, if you're a wagey like me, or like I said, as you get older and older, you just have more responsibilities that like will cut down on time that you can use for personal development. And it kind of naturally, like your brain elasticity will also decrease with age. And so I would really push people who are young to experiment, have fun, take life slowly, in the sense that you don't always have to like rush through school. You don't have to rush through what you're doing. Faster is not better. And I think people understand that, maybe forcibly, as they get older. But when you're young, it really seems like trying to get somewhere fast is like the best way to do it, but it's really not. So I'll leave it there.
Love it, man. Love it. Any accounts that you would nominate for an episode of Perpetual Perspectives? Who should I get on?
Wamba 21, 22.
Yeah. Okay. All right.
Yeah, I don't think he'll do it, but let me think. Someone who would actually like say yes. Let me open my Telegram. Let me see. Okay, I might get canceled if I say this name.
You can say whatever. It's fine.
Let me think.
Unless it's it's the word that I'm thinking it is.
Riff Raff. I'll nominate him.
Okay.
Yeah, not a lot of people know who he is. He keeps like very like undercover, but I can see.
I've interacted with him. I've interacted with him.
I can see you. You're posting a little bit more, Riff Raff. I know you are. You're caring a little bit more about social media. It's a good time.
All right, I'll reach out to him.
People who don't know, he's a top leaderboard trader. He's quite skilled, and I think he probably has some good. And he I don't think he has never been interviewed. So
yeah, I'd love to get him on then for sure. I've interacted with him a little bit, I think, on Twitter, but I don't know much about him, but I'll definitely reach out. Is there anything that you'd like to plug?
I stream sometimes in my public Telegram. I keep it. I never really like announce when I'm going to stream. But if you're interested, if you enjoyed this, and you want to hear more, then I would say like I stream roughly like once a week, and I have been for 7 months ish, maybe like 6 or 7 months. And so thanks for the opportunity, and I appreciate it, Stoic.
Yeah, no, I really appreciate you coming on. Thank you for taking the time out. It was a pleasure to finally get you on the pod, and I thoroughly enjoyed the conversation. We were fucking trying to do this for like half a year now, but
Yeah, that's my
it was
bad.
definitely worth it. And yeah, I'm sure it was enjoyable and insightful for anyone listening in. I usually end these with a quote or a thought provoking note, and I think this one ties in well with this conversation as well. It's a quote by Dostoevsky, and it's to go wrong in one's own way is better than to go right in someone else's. So on that note, we'll end this episode. Stay tuned for more exciting episodes that are on the horizon. I'm going to start recording more of these, and until next time, thanks.
Cool, man. See ya.